Michael, and thanks for joining us again for our regular investment update. Start with a question on investment returns. I've seen a little bit in the media over the last few weeks, the media talking about one-year numbers and funds achieving double-digit returns. Two questions. How are we tracking financial year to date? And then secondly, 1 year as a number to be focusing on. Is that too short term, and what would you recommend members consider?
Sure. So we're healthy single digits return financial to date. The last few days we've seen poor markets, and that's really on the back of fear of contagion in the Middle East, and who knows where that will go. Hopefully nowhere, but you never know. 1 year is a difficult period to focus on. It's very hard to know what will happen over 1 year. Really what members need to be doing is having a strategy, a long-term strategy, sticking to the strategy really about how they're going to make money and fund their retirement benefits.
And long term, what's that mean from a member in a superannuation fund?
Well, it'll depend on the member. So some members will have a shorter, they're older, and will have a shorter time horizon, and they may be looking to get money out the next year or whatever. So you do have to think about it for yourself. In that, if you do have a shorter term horizon, then normally something a little bit more defensive, a little less volatile is important if you're really concerned about maintaining a level of benefit. If you've got a long time, then really, the more growth orientated options are better over the long term. Effectively, they're less risky because over rolling 20-year, 30-year periods, they nearly always outperform more defensive asset classes.
Michael, and what we're also seeing, especially when there's been some volatility in the market, we see a small number of members switching regularly. I guess, what do you see the risks with that, and how would you sort of talk to that issue?
I think experience generally would be that members that switch a lot, on average, lose value doing it. And so they'll switch at the bottom, they'll switch out of something at the bottom, and they'll switch back in close to the top. Now, that's not all members. Some members are quite successful in how they switch, but in general, the averages are against you from that sort of approach. And going back to the previous question, you want a consistent strategy to make money rather than be chopping and changing.
Thank you. And I'll probably get to this as the last question, but I'm normally asking you about performance and what's the outlook for markets. But investment fees and costs are obviously a factor in what you do. Can you sort of talk a little bit about, should members consider fees and costs from an investment perspective, and how you look at it from a fund perspective?
Sure. Well, fees are certain, returns are not. So they are very important, and it's very important to keep fees and costs to a minimum if you can. And that goes all the way through to the companies you invest in. The other day, we had a ballot for an AGM for an American company, and the CEO was asking for $160 million US. Now that comes out of members' pockets. So costs are always important to keep under control at any level.
And so, Michael, as we do every time, the outlook, what do you see happening in the coming weeks, months?
As I said at the start, 12 months is very, very hard to pick. It looks like that growth is slowing globally, but we're not talking about recession at this stage. But it does seem to be slowing. Inflation's been a little bit stickier than people were expecting in the US in particular. So you would say that economically conditions don't look as good as they turned out last year. Not terrible though, so at this stage. But things can change, and you never know what's going to come out of left field. And we'll have to see what central banks do about sticking inflation and whether they raise rates, which will impact markets further than they already have, or they're able to cut, which would be quite beneficial.
Michael, as always, thank you very much. To our members, feel free to give us a call on our contact centre if you have any questions, or look forward to our next investment update. Thanks very much.